All right, y'all, we are live on this Wednesday afternoon. God bless everybody in the name of Jesus, Yeshua the Messiah. I do pray everyone is super blessed as in literally 20 minutes, we are going to get the interest rate decision. That's right. That's right. Last time it was September 17th, 2025. Now we've been waiting months for this day, December 10th, 2025, where the federal funds rate will be decided. And right now we are forecasted for a 25 basis point, that's about a 1/4% interest rate cut. 89.5% chance they're going to lower the interest rates from their current 4% to 3.75%. And then, of course, about half hour after that, Jerome Powell, the man himself, is going to come out of the closet, flapping and groping, to tell us what he thinks about the fiscal policy as we head into Q1 of 2026. And of course, there is much volatility to be expected in these markets. We're getting volatility right now, as can be seen on this massive doji candale. El doge candale de Massavate, which is Italian for the big candle. In Espanol, el candolo grande. And as you can see, the short trade that we took live yesterday is still open. We did come down to my target box. I did not hit a take profit here for the same reasons that I went over yesterday, okay? We're going to wait and see what happens during FOMC, guys. But obviously, we're still in the long trade from the setup given in the Casper Crew VIP Discord from around the price of whatever price that was. I don't even know. I can't read it. But Casper Crew VIP Discord, guys, look at this. Juicy setups given in advance. And both of them were nailed to the dang dollar. Of course, we are still in the short trade from the exact top, basically, setup given in real time as well in the Casper Crew VIP Discord. And today we're going to be watching this volatility unfold as we watch the interest rate decision as well as the press conference. Now, make sure to smash up the likes, guys. A quick little PSA. We are, in fact, giving away $3,000 today. We're giving away $3,000. If you want to win $3,000, come over to the link here in the pinned chat and go ahead and register using KCEX.com/whatever my referral link is, because only if you are signed up under my referral link do you have a chance to win in the $3,000 prize pool. All right, are we going to do 3 giveaways of $1,000 each? 6 giveaways of $500? Are we going to do 1 giveaway of $3,000? That is wait to be decided. Major shout out to everybody in the chat right now. We got to give some major shouts in the house to everybody in the chat. First of all, shout out to John Doe. Shout out to Uptown Dope. Does he watch the event on stream? Heck yeah, we watched the event on stream. What do you think this is? Shout out to Steak Sauce. Shout out to Trest Liu. How are the chickens in the cold? They are cold, all right? Numbers Schmumbers. Shout out to Sports T 8057. He says, big love, my G. Shout out to Sabol Q6I. Jason, you're the man. I copied you yesterday. Well paid. Awesome. Glad to hear it. Shout out to Crypto Clown World. Major shout out to Crypto Coons holding it down with the wrench. Steak Sauce expects sign language during the thing. Yeah, of course, man. El vela no el candalo, ha ha ha, la vela. Sí, sí, señor. Yo nosotros y el cantalone. Buongiorno. Mamma mia. Señor. Hola. That was a little bit of Spanish and Italian mixed together there for you. Major shout to everybody in the house. All right. We see J and HQ. What the heck? HQ. HQ. God bless you, Mystic 7U. May the Lord bless you. Shout out to the Tube 1101. Shout out to Samuel. He says, let's get this FOMC out the way, baby. Jerome Powell out the closet today. Yeah, absolutely. Make sure to smash out the likes, guys, and make sure to sign up on KCEX if you enjoy money. And in fact, you know what we need to do? We need to actually get a Federal Reserve window going. Fed live video. We need to get this live stream ready to go. Here we are. We are ready for the live stream. Let's pop on over and just check out to make sure we can see it. Can we see it? Can we see it? Yes. Yes, we can. Wow. It's working, guys. It is working. It is working quite nice up in here, baby. All right. Cool, cool, cool. Cool, cool, cool. Now we got to dive right into the chart because we do only have 15 minutes until the FOMC decision. All right. Let's pop right into the Bitcoin chart, guys. Make sure to smash the like. Look, again, if you like money, make sure to sign up using KCEX. Also, guys, if we can get 1,000 likes within half an hour, as always, we will be giving away $1,000. So there's a potential right now for a $4,000 worth of giveaways today. All right. That's up to you guys. All right. We're definitely giving away 3K via KCEX, but it's up to you guys. If you want the 4K giveaway today, $4,000 giveaway, you need to smash the like button. All right. Smash the like button. Now, let's talk about what's happening here on the chart because as we know, the Bitcoin price has come down to the bottom of the range. We are bouncing from the last hope support between the macro Fibonacci golden 786 and 886 levels. So essentially, on the high term time frames, this is where we're at. We have confirmed very bearish divergences on our 2-month time frame. We have confirmed very bearish divergences across all time frames, but now the weekly time frame is giving us a very oversold hidden bullish divergence as we're bouncing from last hope support right here, last hope support before actually changing market structure bearish. And we've had 1, 2, 3, this is our 4th week, basically a month of holding this support. When this green dot confirms, we are going to see a large move to the upside. Jay, how can you say such a thing? Well, go and backtest the big green dots on Market Cipher B. Every time they happen, we had one here, we had one here. In the bear market, they gave us big bumps to the upside. We're talking 44, 45%. All right, before the bear market, during the bull market, when they confirmed, guess what? We had one right here. 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 And we had one right here, okay? Sorry for the stupid accent, guys. Like I said, this voice I'm using now is an accent. And it's really hard for me to keep in character. But we are currently getting one here. We could expect a large move to the upside, potentially coming back to $115,000, $116,000. But what else do we know? We know that historically speaking, when we form these bottoms, it's not an easy in and out. Right? We chop around. We form a bit of a range. Last time we formed a bit of a range. Actually, after getting our bounce, we came back again to do the stop hunt before the bounce. All right? The time before that, what did we do? Basically, we got a good old-fashioned introverted head and shoulders pattern here before finally breaking out and getting the pump. All right? The time before that, I forget if we had one here, but the time before that, once again, we took that low the first time from that June low. This time we did have a pretty much a straight out, but I do want to point out the fact that from the initial bounce, we got to move up, and then we got a deep retracement before the big move. So I'm not saying we're necessarily out of the closet yet. All right, but you know who is coming out today is Jerome Powell. And he's going to tell us some things about the fiscal policy of the United States of America that are probably going to, in my opinion, determine the direction that we go from this consolidation right here on Bitcoin. And we are in a market condition right now, if we check this out, of extreme fear. Extreme fear leads to extreme volatility, and things are less fearful now than they were yesterday. But I would say, as we are forming this parallel channel on Bitcoin right now, let's check it out, the parallel channel right here. I think today is going to determine whether we break up or break down. Now, the next things that we need to really consider are the larger value areas, okay? We have officially confirmed a nice daily candle above the level as of yesterday. The day before that, technically also confirmed above the level. And yesterday we also did make a slightly higher high. So we're maintaining bullish market structure as we are attempting to get acceptance back inside of this old fair value zone that takes us all the way back to November 2024 when Donald J. Trump himself wins the election. Now, as we know, 96,000 is going to be a very important area of resistance because, well, it's the top of this bear flag. And not only that, but it's the support resistance flip of pretty much, guys, going all the way back to February 2025. The high volume node, resistance, support, support. And so this is going to be very crucial. If we can reclaim this level, that's a big if. I'd say we could get a fast move back up towards 115,000. But if we reject here, this is where we're probably going to see a move, in my opinion, to probably come back down towards the bottom of this consolidation that we are in, and we're going to break down from this area. So this is very key today. I think today is going to be the catalyst for that big move. I think when we see the announcement, we're going to get a doji candle. The doji candle is going to be followed by the press conference, which will set the tone for Q1 2026. And remember, as we started to get the move down in November, the Fed was hawkish. People were thinking no rate cut in December, no rate cut in December, no rate cut in December. But as we get closer to December, people are saying, oh, just kidding, there is a rate cut, there is a rate cut, there is a rate cut. And so, is the rate cut already priced in? Is this a dead cat bounce? Are we going to reject from this area and come down? We are going to find out today, and it's going to be a very interesting day, all right? Now, these bull flags, so far, this has offered us some nice entries on the trades, right? The long from 84, all right? Boom. The long from 89. Boom. Look at that juicy entry given in advance, all right? So if we're going to continue with some bullish market structure here, and we see the breakout, the Casper crew is already locked and loaded and ready to go in the juicy long trades. And of course, if we reject, well, the Casper crew, we are already short, literally from the top, from the setup given in real time in the Casper crew VIP Discord at jasoncaspertrading.com. Click the link to join the best trading community in the world. If I'm not mistaken, I am. No more Black Friday sale. Dang. What a miss out. Man, I would be upset if I missed the Black Friday discount. But speaking of money, we are giving away $3,000 today. If you want to win $3,000, listen. If you want to win $3,000, listen. If you want to win, I'm saying this because people, you could say it a million times and people won't know. If you want to win $3,000, click the link right here. Create an account. You don't have to deposit any money. But you need to sign up using my link in order to be eligible to win. Okay? Very important. When we look at the daily time frame on Bitcoin, as we are waiting for the man himself, we see that we are seeing momentum get higher. We go to our 4-hour. This is where things get scaly. Scaly, okay? We are seeing some bearish divergences really form here as we make the higher highs. All right, we're seeing the momentum tick down. We're seeing the money flow tick down as we make higher highs. A little bit shady. The 1-hour time frame. We are seeing the money flow getting lower here and the momentum waves getting lower as we are making higher highs. All right, there's a few warning signs that maybe we do reject, okay? Now, something else I do want to bring up as we get more local here. If we're going to break out, look at this. Look at this. Right now, we have seen a move. This is the local range that we've been basically trading since Friday, the 14th of November. We have come to the bottom of the range, right from the setup given in the Casper Crew VIP Discord, right? Setup given. We bounced from that area. And from this area, around $84,000, we come to the top of the range. And we actually didn't touch the top of the range until yesterday, right? And now if we take a look at our Fibonacci Golden Pocket Pull from Tuesday to today, and we put on our 618, you can see that we do have a very important zone of support right here. So as long as we're not going to lose this box, and I take it down to the 786, as long as we're not going to lose this box, I think we do have a chance of getting moved to the upside. This green box is the same white box that we had yesterday, guys. If you remember, I took the short trade live yesterday with a target down at the white box. Why the white box? Because of the golden pocket and the confluences that we had there, okay? And so I still hold to this. If we don't lose the white box, then we could see a bounce. If we lose the white box, you know, this is one of the reasons why I'm in a short trade here from that level, because like I said, I'm in multiple long trades right now. I've realized $8,000, but I'm still up, you know, 3,500 plus another 15. So I'm still up $5,000, right? I'm still up $5,000. And so this short is a hedge against my longs. I didn't get in with as big of a position size as I would have liked to, but that's because I didn't get a retest yesterday to add more at the golden pocket, and that's okay. 4 minutes, guys, until we get the rate hike, Freudian slip, decision. 3 minutes, 33 seconds. Here we go, baby. Here we go. I got butterflies in my stomach. I'm really excited about this. And we got to give a major shout out to everybody in the chat. Have I ever played hockey somehow? I used to play hockey when I was a kid. Street hockey. In the street. Shout out to Chad P. Caspio boy. Arg, Caspi me oh boy. Shout out to Code Magic 8238. He says, 2 Coronas deep and took a huge rip for the Casper crew. Nice. Shout out to Antonio. He says, where are we going, Jason? Oh, we're going, baby. Shout out to Game Shark Memory. Shout out to Whirl 4. And shout out to Logitech 1. Shout out to Splash Bar Films. And M Sound Live. ETH just took a high. Let's take a quick look at ETH while we wait for this. My goodness, guys. Is this not the most crazy day of price action you've ever seen? Wow, look at that. ETH making a higher high here. And ETH right now looking like she's trying to get a swing failure pattern, what we call down south a chickens drinking water pattern of this previous range high here. Yeah, look at that. That is crazy, man. That is crazy. We are setting ourselves up for some insane volatility. I cannot wait to watch. I cannot wait to watch what happens to the price. Sheesh. All right. We got 2 minutes left, guys. 2 minutes left. And we did take a poll in the chat, and I'm curious to see what you guys think here. Will the rate decision pump and dump and pump, straight down or straight up? Interesting. Most people think pump and dump. Now remember, most people are usually wrong, right? The majority is usually wrong. The majority's wrong. But sometimes the majority's right. So let's see here. My goodness, guys. 2 minutes left. 1 minute and 30 seconds left. I'm freaking out. The adrenaline is really pumping here. We got 1 minute and 23 seconds left. The adrenaline is pumping, baby. It's pumping. Of course, we got to take a look at the overall stock market as well. Let's see how the ES has been today. A pretty boring day. Obviously, everyone's waiting for FOMC, chopping around the point of control, macro. Yeah, I guess the big question everyone's wondering now about S&P is, you know, is this a lower low on the daily? You know, I wonder where we also. It's a pretty deep retracement. Man, this is going to be intense. Imagine if we see the stock market also dump to take the lows right here at 6,803. This is the mini futures. All right, we got 1 minute, guys. Uno minuto. 26, 25, 24, 23, 22, 21. Oh my goodness. Cannot wait for this. Let's check out the order flow. Let's check out the order flow, baby. Wow. So we have seen quite a big number of trades closed today. Okay, here we go. We just got our news, and we're getting a massive green candle. Massive green candle! Oh no, you know what that means. Massive green means a dump. Okay, we got the rate cut, guys, exactly as predicted. We got the massive green candle, which usually means we're about to dump after that. Look at the 1 hour. My goodness, look at this. Oh my goodness. Oh, it's amazing. It's just like everyone said it was gonna be. Oh man. Oh my goodness. Wow. Wow. We're pumping it. It's really happening. It's really happening, guys. Oh man, Jerome. Thank you, Jerome. Oh, Jerome Powell. Thank you. Oh no. What's happening now? A little bit of a wick to the downside, but you can see boom, 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 green candles coming up. Let's check out the order flow. Wow, look at this, guys. 7 million trades opening up, 2 million longs coming in right now. People longing this bullish news. Oh my goodness, people longing the bullish news right now. Let's see. Let's see. Wow, would you look at that big increase of open interest right here. I mean, after all day, everybody that closed out all day were basically back open, mostly longs. It's only 7 million 7 million volume right now in 1 minute. 7 million volume in 1 minute here. Look at this beautiful green. Big juicy green. Wow. Okay. So we're getting some volatility, the spike into the market. Now, whoa, what's happening now? Come on, blue. Don't turn purple. Don't turn purple. Oh no, we got a purple on the 1 minute. Big dirty perp. Big Daddy Perp, gonna give you the herp. We're coming back down, making all the birds chirp. All right, let's see what happens. Now remember, guys, the real main event is yet to happen. All right, the real main event is the FOMC press conference. All right, this is what we've been waiting for. This is what we've really been waiting for, as can be seen from the thumbnail of the video. All right, myself and Jerome Powell are both going to be participating at the Federal Reserve building with blue and purple candles in the background, and me standing creepily behind Jerome Powell. But that's just the way, it's just the camera angle, honestly. It's just the camera angle. The thing is, I'm so much taller than him in real life. In order to get it to look like we were next to each other, it had to be this way. Okay, it had to be this way. Now, just a quick reminder, guys, if you want to win $3,000, click the link to win $3,000. You gotta click the link or you can't win 3,000. Okay, we're starting to get some purple candles, all right? They lied to me about FOMC. They lied to me about the rate cut. They said we were gonna pump. Oh no, we're dumping right now. Look at this. We're back down below the yellow line of hope and wonder. Are we going to make a lower low here? Are we going to take out this low? My goodness, look at this. Are we going to come down and take the low? Oh my goodness, we're dumping. Oh. Are we gonna take low? Are we gonna make a higher low? Wow, would you look at this insanity? Would you look at this insanity? All right, we took out the pre-FOMC low level here. All right, are we going to go for the overall low? That's the real question of the day right now. It looks like we might not. You know, this dang FOMC volatility never gives you what you want. All right, she never gives you what you want. All right, Jerome Powell never gives you what you want. All right. All right, now this is exactly what we expect. When you get the decision, you get the old Darth Maul doji. Real direction will be determined at the good old press conference. And trust me, when he starts speaking, we are going to see some crazy candles start flying. All right, the candles are going to fly. They're going to fly, baby. All right. Let's see. ETH just took the high. Yeah, these are old chats. Shout out to everybody in the chat. Make sure to smash up the likes, guys. We have 1,700 people in the chat. Why am I freaking out, Joe buddy? That's the whole purpose of this live stream, bro. That's literally the purpose of the live stream. Is for me to freak out. Why else would we be live right now? To do analysis? What do you think this is? Technical now? Come on, bro. No, we're here to freak out. All right, it's a rush. We're here for the rush. You know, some people, they're addicted to kratom. Some people are addicted to methamphetamines. I'm addicted to the candles. I'm sniffing the candles. Try and get the next hit. All right? Trying to get back to that first high I got. The first time I 200x leveraged my whole account longing the top. I'm trying to duplicate that feeling, okay? That's why we're freaking out. Now, let's see what happens. Again, okay, so just to be real, guys, remember, getting... Jason, get your composure together. They're going to put you back in the institution. All right. Look, just to gather our composure here, remember the importance of this green box, guys. Remember the importance of the white box that we've had on our chart since yesterday. If this holds, I think we could see a nice move to the upside. If this holds not, All right, we could see some significant downside. It really does need to hold. This is make it or break it here at this green box. So far, we holding above pretty good. Actually, so far, I do have to say, so far, what we see with this bottom actually looks pretty nice for more upside here. What would make it look nicer is if we came into the box. But let's not forget, we are seeing a very nice looking rounded bottom higher low coming in right here. Let's quickly, once again, go back to the order flow. I am not taking long here, by the way, just so everyone knows that. I would not long this. I gotta wait for a better level. But let's check out the OF. All right, check out the OF over here. Yeah, so, wow. This is our 15-minute chart. Let's get to our 5-minute. Looks like there's a glitch here. Looks like there's a little glitch on the open interest. 1 second here, guys. There we go. Okay, yeah, so look, interesting. We started with positive delta, now we have negative delta, more shorts than longs opening. Now, there is some serious flopping and groping going on right now because people are opening up trades like crazy, basically gambling on what direction we're going to go. And for some reason, I'm having issue loading the order flow chart here, which is a little bit frustrating, but that's okay. We got to work with what we got, baby. So we got to work with what we got. It's difficult for me to see actually what's happening here because a little bit of a glitch here in the open interest. Let's pull back our 5-minute chart, see if we can get this to work. What is going on with this? What is going on with this? What is going on with this, mate? ETH Bitcoin is freaking out. Let's check it out. All right. Let's check out the ETH Bitcoin pair because we were really looking at ETH Bitcoin pair. All right, we've obviously got some issues here. We got to check out the ETH Bitcoin pair. This is ETH against Bitcoin. Wow. Look at that. Look at that. It's because, do you know why this is happening? It's because ETH pumped up more than Bitcoin. ETH took the high of the range, and now ETH is dropping, right? ETH pumped up, ETH took the top of the range, and now ETH is dropping. We check out our 4-hour here. You know, in general, I think this is a bullish chart, obviously, on the high time frames. I think ETH is poised to really outperform Bitcoin over the next few. I think so. This big break and back test of the POC, it looks really bullish. And now we're changing market structure. This totally looks like a bull flag to me. Honestly, it totally looks like a bull flag. Man, I cannot wait for Jerome Powell to start speaking. He's going to start speaking, guys, in approximately 22 minutes. All right, 22 minutes. Let's get back to the stock market and see how the stock market has reacted to this news of the rate cut. Pumping, baby. This is not necessarily, I mean, we're going to see what happens during the FOMC, but right now the ES mini futures, is the S&P 500, is also taking a local high here. All right, let's see if this is going to result in a pullback. All right, let's check out the dollar. The dollar is dumping. Makes sense. Lower interest rates means a weaker dollar in general. People are more apt to put their money into risk assets like stocks, like cryptocurrencies. Bitcoin, Doji on the hour. Doji on the hour. All right. Doji on the hour. Do I still believe we're going to a bear market? This is not the best stream to talk about it, but my view has not changed since yesterday, okay? My view has not changed since yesterday, but this is definitely not the best stream to talk about it, okay? Is it safe to 400x short? Look, anything's safe if you're using good risk management, all right? Pump and dump all the way down, baby. We are at key. Here we go. We're actually starting to get a little bit of a pump here. Look, they were right. It is everything they told us. It is everything that they told us. All right, we're getting a money flow cross on the 6-minute. We had our initial doji. We got 20 minutes until Jerome Powell Maybe we just chop around in here for a little bit. It looks, here's what it looks like to me. If I had to take a gander, it looks like we want to pump up. I think this looks like a nice retest right here. This looks like a nice retest right here. We got some low time frame bullish div. I think we can come up and get some higher time frame bearish div. 1 second, guys. All right, y'all, we are back in action. Yeah, I have a feeling we could see some upside action today. We got a little bit more time until JP comes out the dang closet, shaking and baking. Shaking and baking. How many steps have I walked today? Not too many, honestly. Not too many. Hawkish Fed is obvious. We're gonna see. We're gonna see. It would be really cool to get a pump and dump here, guys. The reason why I like a pump and dump is because, look, if I just feel like, I'll tell you why I want to pump and dump. I really want to see the Bitcoin price come up a little bit, trap a whole bunch of bulls, come down, trap a whole bunch of bears, come back inside the range, make a higher low, and then rip back up toward, 115, 116. That's what I actually want to see here. I want to see this look like, accumulation. Very similar to this right here, right? A little sideways action, come down, get the bounce, make the lower low, we come up, we take the high a little bit, we come all the way down, and then consolidate, boom, right? I want to see that happen again. That would be really healthy, because right now, it's just basically like a bear flag. And I'm not saying we can't go straight up from here, we could. In fact, I'd say max pain probably right now is straight up, simply because this whole way down, we saw massive amounts of ETF outflows. We saw massive amounts of money leave crypto, period. Bitcoin, altcoins, everything, total crypto cap. Totally, like, seller exhaustion to the max right here. And so, yeah, it actually would make sense from a max pain perspective of what would wreck the most people would be to pump everybody who sold the bottom. Pump on everyone who sold the bottom. Because obviously, because there was so much selling happening here, you very well could have big players gathering up to boom, it back up. But what would be healthier and more easier to trade, uh-oh, I'm making myself sound like it's not going to happen now, would be something like this. That would be healthier and easier to trade. Give us some more consolidación right here. A little bit more consolidación. All right, we've got about 15 minutes plus 2. And we are going to be watching this live right now to see what's going to happen. All right? To see what's going to happen here. Pump to dump to pump. Yeah. Pump to dump to pump. That's exactly. El Punto Verde has been deported. Shout out to Crocy. He says maybe they start buying again and they have money on the side. Yeah, maybe. Like up the stream, everybody. Look, by the way, we're giving away $3,000 today. It's a big W. Shorts will come and help us take 97. Yeah, this does look like a W right here. Are you talking locally here? The Wumbo pattern. Yeah, we made a higher low. This is a nice low, actually. This actually is a pretty nice looking low right here. Coming down just to not quite take the low. Yeah, it looks pretty nice right now, actually. It looks like we are gonna get a bit of a Pumperonian Casso. Also known as the Picasso pattern. The Picasso pattern. All right. The Picasso pattern. All right. Guys, if you want to win $3,000, click the link right here. You have to create a KCEX account. And we are giving away $3,000. Shout out to Dildo1. Dildo1 wants a shout out. So we'll give you a shout. Dill Doe 1. All right. Shout out to J Boy. I said it was bearish. He says smash the like. Like if you want. Ton sell tor cow for a few beans. Cool. Sounds cool. Shout out to Bullish on Parade. Shout out to Molzar. She says, what a name, LOL. What would wreck most people would be to shoot it up now? Yeah, that's what I'm saying. Like, a lot of people are on the sideline right now. I mean, we have seen, you know, just the most insane amount of money leaving Bitcoin on this way down. It was a slow, painful grind. Slow, painful grinds down result in fast pumps to the upside. So we could see it, and honestly, I do feel that today is going to be a major decision day, simply because if this thing confirms at the end of the week, this big green dot, just historically speaking, guys, we're in for at least a 45% pump, right? Let's just go back and look at all the times that we've had this green dot on the weekly print, even if we're in a bear market, guys. I mean, we don't have very many green dots in the weekly. This oversold. You know? I mean, we had one here. We had one here. We had one here. And then this entered us into the bull market. You know, this one here pumped us 45%. This one right here pumped us 45%. This one right here obviously enters us into the bull market. This one right here, massive pump. Massive pump. Massive pump. There's no reason to think why this won't also give us a massive pump. And if we are to see, you know, like I said, the 45% move, if the low is in, that's going to be taking us up around 100, 116, 117. Back up to the top of the range, man. Back up to the top of the range. And that would be max pain for so many people, because I do know a lot of people got out on this way down. All right? A lot of people got out on the way down. Now, personally, I did not sell anything on the way down. I did sell 120K, as many people know. Jason Casper sold 60K, 80K, 100K, and 120K. Yeah, and I don't plan to buy any more Bitcoin until we hit some targets that I've talked about many times in the past. But there are very specific things I need to see happen before I waste. Did I say waste? Before I invest my cash into the most bullish asset in all of history. Let's not forget, Bitcoin is literally the most bullish asset in all of history. You know, we're going to take it from the low. And it's pretty crazy to think that Bitcoin has pumped up. It's 14 billion %. 14 billion %. I mean, that is wild, man. That is pretty crazy. Oh my goodness. I mean, that's if we're taking it from literally less than a cent. But let's take it from 1 cent, all right? Let's make it more reasonable. All right. 1.7 billion %. 1.7 billion %. That's insane. That is crazy, man. All right, we got 12 minutes until JP comes out flapping and popping. Flapping and popping. And please, guys, look, if you want to win part of the $3,000 giveaway, you must sign up to KCEX using my link in the pinned chat right here. All right, we're going to do a giveaway. All the people right now who are not paying attention are going to be asking, how do I win the giveaway? And I'm going to say, you should have clicked the link, but I didn't have time. Now's your time. All right, now's your time. Now's your time. All right, let's see here. Here we go. Back to the chat. All right, let's see. Who else we got in the chat right now? Make sure to smash up the likes. We are chopping around this area, guys. We are major chop right now around this area. Bitcoin is the best asset ever created. I think that's true. As far as created assets go, I think Bitcoin is the best asset. You know, if I get the 3K, we will go to 97K. Okay. Would like to see Jason and Jerome Powell sing a duet. Please say, I can't say this, FC King 1. I don't know what it means. Shout out to Irish Dutchman. Step 2, finish the stream with us. Do we need to give you the user ID? Yeah, that's how we're going to do it, all right? That's how we're going to do it. Price action looks like a bar scanner right now. You're right. Dill underscore doe underscore 1. You are right. What's my view on ETH outperforming Bitcoin? I think ETH is poised to outperform Bitcoin in the next few months. All right, let's check it out. Let's check it out. So if we take a look at some of these higher time frames, like the 2-week, what do we see about ETH versus Bitcoin? We came down to the bottom of the range, forming what looks to be an extremely squeezable pattern. We've already squeezed this horrible action, and we back tested the high volume mode now as support after printing a bullish divergence on the 2-week time frame. And if we go to the weekly time frame, we are printing a trigger wave after a bull div with increasing money flow. It looks like we want to squeeze up from here another 45% or so. And if we can hold above 53.23, then I don't see why we can't just continue to squeeze this nonsense. I think we are poised to see ETH outperform Bitcoin. Now, is this going to translate into USDT gains? It depends. You know, we could be in a downtrend for ETH and Bitcoin and see ETH outperform Bitcoin, right? So, you know, I think it depends on a lot of market conditions. But I do think if certain things happen, which we've laid out very clearly all week so far, we do have all the ingredients for some serious altcoin gains coming up within the next few months. I'd say January, this last half of December and January could lead to some nice altcoin pumps. Some potentially hitting all-time highs, others not, but still getting some significant pumpage. All right, still getting some significant pumpage. How to enter the giveaway? You got to sign up clicking the link. All right, but also we got to get 1,000 likes on the video. Not for the $3,000 giveaway, but we do need 1,000 likes on the video. Period. The original proposition was if we can get 1,000 likes in half an hour, we'll give away $1,000. We didn't do that, but can we get 2,000 likes in 1 hour and 15 minutes? Let's see, 1 hour and 15 minutes. That's gonna be 20 minutes from now. Nah, I don't think that's possible. Not without a bot. Please don't bot the stream, guys. Do not bot the stream. Bot the stream, I can't do the giveaway, alright? It's not good for the algorithm. We have bear CBD on the 30-minute. Let's check out the order flow again. Maybe it's done glitching out on us here. Let's refresh this. What in the world is up with all this? Here we go. Yeah, we technically do have some bear CBD coming in here, guys. Right, from the high we made up here to our current high, which is a lower high. Yeah, we are seeing some longs being potentially absorbed here, as we have 7 minutes until Jerome Powell comes out to tell us what is going to happen next as far as the outlook of the Federal Reserve goes in the United States of America. No, you don't have to deposit for the giveaway. You just have to sign up. Are people putting their UIDs bots? Probably. They're probably bots, or they just think we're doing the giveaway now. We're not doing it now, guys. We're not doing it now. All right? We got 6 minutes until Jerome Powell speaks. All right, let's get it ready. Let's get it ready here. All right. We got 4 minutes, guys. 4 minutes. Can you believe it? Am I bullish or bearish in a general sense? Yes. Major shout out to Bitcoin Census. He says here for some British and Spanish trading commentary. That's what's up, bro. You're also, make sure, guys, if you're not subscribed to Andy from Bitcoin Census, go subscribe. All right, he is the premier British Spanish TA analyst. All right, the best in the world. Why is KuCoin sending notifications? I don't know, exchanges, man. They want you to trade. They want you to trade. You know, you get the notification from the exchange. They're like, look, I'm not trying to make you FOMO, but right now, according to the MACD, there's a 99% chance you're going to make money on 100x leverage long right now. Trade now, is what they say, basically. You know? Does KCEX have eggs? No, but there is an egg code today. An egg code if you are in the Discord, the paid or free Discord, if you want to win prizes. You need eggs to win the prizes in the Discord, and today the egg code is going to be, I'll tell you what it's going to be. It's going to be FOMC, all right? It's going to be FOMC. The egg code is FOMC. All right. Guys, if you want to win prizes in the Discord, head on over to the Discord, or you can join the VIP. And in the egg rewards section over here, go ahead and enter in right here, quests, the public live stream right here. Type in FOMC, and you can get eggs. These eggs are redeemable for prizes every single week in the Discord. We are literally giving away hundreds of dollars, all right? And every single day in the Discord, we give away eggs, all right? Also, speaking of giveaways, guys, I am giving away $3,000 today. So make sure to head on over to the link in the pinned chat and sign up to KCEX. You do not need to deposit. You do not need to deposit. All right, here we go, guys. Jerome Powell very soon is going to be, let's see if it's starting yet. Let's see here. Let's see. What's my favorite song? Yo. He is the man of the hour, Jerome. He's the man with the power, Jerome, Jerome. Yeah, yeah, yeah. Yeah, I'm feeling this. I'm feeling this. He's the man of the hour. All right, here we go, baby. Here we go.
Good afternoon. My colleagues and I remain squarely focused on achieving our dual mandate goals of maximum employment and stable prices for the benefit of the American people. Although important federal government data for the past couple of months have yet to be released, available public and private sector data suggests that the outlook for employment and inflation has not changed. as much since our meeting in October. Conditions in the labor market appear to be gradually cooling, and inflation remains somewhat elevated. In support of our goals, in light of the balance of risks to employment and inflation, today the Federal Open Market Committee decided to lower our policy interest rate by a 1/4 percentage point. As a separate matter, we also decided to initiate purchases of shorter-term Treasury securities solely for the purpose of maintaining an ample supply of reserves over time, thus supporting effective control of our policy rate. I will have more to say about monetary policy and its implementation after briefly reviewing economic developments. Although some key government data have yet to be released, available indicators suggest that economic activity has been expanding at a moderate pace. Consumer spending appears to have remained solid, and business fixed investment has continued to expand. In contrast, activity in the housing sector remains weak. The temporary shutdown of the federal government has likely weighed on economic activity in the current quarter, but these effects should be mostly offset by higher growth next quarter, reflecting the reopening. In our summary of economic projections, the median participant projects that real GDP will rise 1.7% this year and 2.3% next year, somewhat stronger than projected in September. In the labor market, although official employment data for October and November are delayed, available evidence suggests that both layoffs and hiring remain low, and that both households' perceptions of job availability and firms' continue to decline. The official report on the labor market for September, the most recent release, showed that the unemployment rate continued to edge up, reaching 4.4%, and that job gains had slowed significantly since earlier in the year. A good part of the slowing likely reflects a decline in the growth of the labor force due to lower immigration and labor force participation, though labor demand has clearly softened as well. In this less dynamic and somewhat softer labor market, the downside risks to employment appear to have risen in recent months. In our SEP, the median projection of the unemployment rate is 4.5% at the end of this year and edges down thereafter. Inflation has eased significantly from its highs in mid-2022, but remains somewhat elevated relative to our 2% longer-run goal. Very little data on inflation have been released since our meeting in October. Total PCE prices rose 2.8% over the 12 months ending in September, and excluding the volatile food and energy categories, core PCE prices also rose 2.8%. These readings are higher than earlier in the year as inflation for goods has picked up, reflecting the effects of tariffs. In contrast, disinflation appears to be continuing for services. Near-term measures of inflation expectations have declined from their peaks earlier in the year, as reflected in both market and survey-based measures. Most measures of longer-term expectations remain consistent with our 2% inflation goal. The median projection in the SEP for total PCE inflation is 2.9% this year and 2.4% next year, a bit lower than the median projection in September. Thereafter, the median falls to 2%. Our monetary policy actions are guided by our dual mandate to promote maximum employment and stable prices for the American people. At today's meeting, the committee decided to lower the target range for the federal funds rate by a 1/4 percentage point to 3.5 to 3.75%. In the near term, risks to inflation are tilted to the upside and risks to employment to the downside, a challenging situation. There is no risk-free path for policy as we navigate this tension between our employment and inflation goals. A reasonable base case is that the effects of tariffs on inflation will be relatively short-lived, effectively a one-time shift in the price level. Our obligation is to make sure that a one-time increase in the price level does not become an ongoing inflation problem. But with downside risks to employment having risen in recent months, the balance of risks has shifted. Our framework calls for us to take a balanced approach in promoting both sides of our dual mandate. Accordingly, we judged it appropriate at this meeting to lower our policy rate by a 1/4 percentage point. With today's decision, we have lowered our policy rate 0.75 of a percentage point over our last 3 meetings. This further normalization of our policy stance should help stabilize the labor market while allowing inflation to resume its downward trend toward 2% once the effects of tariffs have passed through. The adjustments to our policy stance since September bring it within a range of plausible estimates of neutral and leave us well positioned to determine the extent and timing of additional adjustments to our policy rate based on the incoming data, the evolving outlook, and the balance of risks. In our summary of economic projections, FOMC participants wrote down their individual assessments of an appropriate path of the federal funds rate under what each participant judges to be the most likely scenario for the economy. The median participant projects that the appropriate level of the federal funds rate will be 3.4% at the end of 2026 and 3.1% at the end of 2027, unchanged from September. As is always the case, these individual forecasts are subject to uncertainty, and they're not a committee plan or decision. Monetary policy is not on a preset course, and we will make our decisions on a meeting-by-meeting basis. Let me turn now to issues related to the implementation of monetary policy, with the reminder that these issues are separate from and have no implications for the stance of monetary policy. In light of the continued tightening in money market interest rates relative to our administered rates and other indicators of reserve market conditions, the committee judged that reserve balances have declined to ample levels. Accordingly, at today's meeting, the committee decided to initiate purchases of shorter-term Treasury securities, mainly Treasury bills, for the sole purpose of maintaining an ample supply of reserves over time. Such increases in our securities holdings ensure that the federal funds rate remains within its target range and are necessary because the growth of the economy leads to rising demand over time for our liabilities, including currency and reserves. As detailed in a statement released today by the Federal Reserve Bank of New York, reserve management purchases will amount to $40 billion in the first month and may remain elevated for a few months to alleviate expected near-term pressures in money markets. Thereafter, we expect the size of reserve management purchases to decline, though the actual pace will depend on market conditions. In our implementation framework, an ample supply of reserves means that the federal funds rate and other short-term interest rates are primarily controlled by the setting of our administered rates, rather than day-to-day discretionary interventions in money markets. In this regime, standing repurchase agreement, or repo operations, are a critical tool to ensure that the federal funds rate remains within its target range, even on days of elevated pressures in money markets. Consistent with this view, the committee eliminated the aggregate limit on standing repo operations. These operations are intended to support monetary policy implementation and smooth market functioning and should be used when economically sensible. To conclude, the Fed has been assigned 2 goals for monetary policy: maximum employment and stable prices. We remain committed to supporting maximum employment, bringing our inflation sustainably down to our 2% goal, and keeping longer-term inflation expectations well anchored. Our success in delivering on these goals matters to all Americans. We understand that our actions affect communities, families, and businesses across the country. Everything we do is in service to our public mission. At the Fed, we will do everything we can to achieve our maximum employment and price stability goals. Thank you, and I look forward to your questions.
All righty. Oh, wow. That was loud.
Thank you. Howard Schneider with Reuters. Just first turning to the statement, just to be clear, we're on the same page here. The insertion of the phrase, considering the extent and timing of additional adjustments, does that indicate that the Fed is now on hold until there's some clearer signal from inflation or jobs or the evolution of the economy along the baseline outlook?
So, yes, the adjustments since September bring our policy within a broad range of estimates of neutral. And as we noted in our statement today, we are well positioned to determine the extent and timing of additional adjustments based on the incoming data, the evolving outlook, and the balance of risks. That new language points out that we'll carefully evaluate that incoming data. And also, I would note that having reduced our policy rate by 75 basis points since September and 175 basis points since last September, the Fed funds rate is now within a broad range of estimates of its neutral value, and we are well-positioned to wait to see how the economy evolves.
And if I could follow up on the outlook there, it seems like with the additional GDP growth coupled with easing inflation and a fairly steady unemployment rate, this seems like a pretty optimistic outlook for next year. What's given rise to that? Is this an early bet on AI? Is there some sense of improving productivity out there? What's driving that?
So a number of things are driving what's happening in the forecast. And I would say if you look broadly at outside forecasts, you do see a pickup in growth in many of those now too. So it's partly that consumer spending has held up. It's been resilient, and it to another degree it is that AI spending on data centers and related to AI has been holding up business investment. So overall, the baseline expectation for next year is, at least at the Fed, and I think with outside forecasters too, is a pickup in growth from today's relatively low level of 1.7%. I mentioned that the SEP median is 1.7 for this year growth and 2.3 for next year. You actually, some of that is due to the shutdown. So you can take 0.2 out of 2026 and put it in 2025. So it would really be 1.9 and 2.1. But overall, yes, for a few reasons, fiscal policy is going to be supportive, and as I mentioned, AI spending will continue. The consumer continues to spend, so it looks like the baseline would be solid growth next year.
Steve.
Thank you, Mr. Chairman, for taking our questions here. You had previously described rate cuts in terms of a risk management framework, and kind of following up on what Howard was asking, is the risk management phase of rate cuts over here, and have you taken out sufficient insurance, I guess, against potential weakness in terms of the data we might get next week when it comes to employment?
So we're going to get a great deal of data between now and the January meeting, and I'm sure we'll talk more about that. And the data that we get are going to factor into our thinking. But yes, we have, if you go back, we held our policy rate at 5.4% for more than a year because inflation was high, very high, and unemployment and the labor market was really solid at that point. So what happened is over last summer of 24, inflation came down and the labor market began to show real signs of weakness. And so we decided, as our framework tells us to do, that when the risks to the two goals become more equal, you should move from a stance that favors really dealing with one of them, in that case inflation, to a more balanced, more neutral setting. And so we did that. We did some cutting, and then we paused for a while to work our way through what was happening in the middle of the year. And then we resumed cuts in September, and we've cut now 3. We've now cut a total of 175 basis points. And as I mentioned, we feel like where we're positioned now we're well positioned to wait and see how the economy evolves from here.
If I could just follow up on the SEP, you have a whole lot of big increase in the growth numbers, but not a big decline in the unemployment numbers. And is that an AI factor in there? What is going on in terms of the dynamic of you get more growth, but you don't get a whole lot of decline in unemployment? Thank you, sir.
So the implication is obviously higher productivity. And some of that may be AI. It just also, I think, productivity has just been almost structurally higher for several years now. So if you start thinking of it as 2% per year, you can sustain higher growth without more job creation. Of course, higher productivity is also what enables incomes to rise over long periods of time. So it's basically a good thing. But that's certainly the implication.
Thank you. Colby Smith with the New York Times. Today's decision was clearly very divided. It wasn't just the 2 official dissents against the cut, but there were also soft dissents from 4 others. And I'm just wondering if this reluctance from several people to support recent reductions suggests that there is a much higher bar for cuts in the near term. And what exactly does the committee need to see if things are well positioned right now to support a January reduction?
Sure. So let me just say, as I mentioned, and as I've mentioned here before, the situation is that our 2 goals are a bit in tension, right? So, interestingly, everyone around the table at the FOMC agrees that inflation is too high and that we want it to come down, and agrees that the labor market has softened and that there's further risk. Everyone agrees on that. Where the difference is how do you weight those risks, and what does your forecast look like, and where do you, ultimately where do you think the bigger risk is, and you know, it's very unusual to have persistent tension between the two parts of the mandate, and when you do, this is what you see, and I think it's actually what you would expect to see, and we do see it. Meanwhile, the discussions we have are as good as any we've had in my 14 years at the Fed. They're very thoughtful, respectful, and you just have people who have strong views, and you know, we come together and we reach you know, a place where we can make a decision. We made a decision today. We had, you know, 9 out of 12 supported it, so fairly broad support. But it's not like the normal situation where everyone agrees on the direction and what to do. It's more spread out, and I think that's only inherent in the situation. In terms of what it would take, you know, we all have an outlook in terms of what's going to come, but I think ultimately having cut 75 and, you know, the effects of the 75 basis points will only begin to be coming in. As I've said before a couple times, we're well positioned to wait to see how the economy evolves. We'll just have to see. And we will get, as you know, quite a bit of data. I should mention on the data, as long as I'm talking about it, that we're going to need to be careful in assessing, particularly the household survey data. There are very technical reasons about the way data are collected in some of these measures, both in you know, inflation and in labor, in the labor market, so that the data may be distorted and not just sort of more volatile, but distorted, and that's really because data was not collected in October and half of November. So we're going to get data, but we're going to have to look at it carefully and with a somewhat skeptical eye by the time of the January meeting. Notwithstanding that, we will have a lot of the December data by the time of the January meeting. So we expect to see a lot more, but I'm just saying that what we get for example, CPI or for the household survey, we're going to look at that really carefully and understand that it may be distorted by very technical factors.
And just one more question on dissents. I mean, you talk about it in a very positive way, just given the complicated nature of the situation we're in economically. But is there any point in which those dissents become counterproductive, either to, you know, the Fed's communication and the messaging around the policy path forward?
I don't feel that we're at that point at all. I don't. I would say, again, these are good, thoughtful, respectful discussions, and you hear people say, and you hear many outside analysts say the same thing. I could make a case for either side. I mean, I could make that case. It's a close call. We have to make decisions, and we always hope that the data will give us a clear read. But in this situation, you have competing. If you look through the SEP, you'll see that a very large number of participants agree that risks are to the upside for unemployment and to the upside for inflation. So what do? You've got one tool. You can't do two things at once. So at what pace do you move? What size moves do you make, and that kind of thing? And what's the timing of them? It's a very challenging situation. I think we're in a good place to, as I mentioned, to wait and see how the economy evolves.
Nick.
Nick Timmeros of the Wall Street Journal. Chair Powell, there's been some discussion recently of the 1990s. In the 1990s, the committee did 2 discrete sequences of 3 quarter-point cuts, one in 1995-96 and one in 1998. And after both of those, the next move in rates was up, not down. With policy now closer to neutral, is it a foregone conclusion that the next move in rates is down, or should we think of policy risks as genuinely two-sided from here?
So I don't think that a rate hike is anybody's base case at this point, and I'm not hearing that. What you see is some people feel we should stop here and that we're at the right place and just wait. Some people feel like we should cut once or more this year and next year. But when people are writing down their estimates of policy of where it should go, it is either holding here or cutting a little or cutting more than a little. So I don't see the base case as involving that. So of course, a data set of 2, now 3, is not a big data set, but you are right about those 2 3-cut times in the 90s.
If I could follow up, the unemployment rate has been rising very gradually for the better part of 2 years, and indeed the statement today no longer describes the unemployment rate as remaining low. What gives you confidence it won't continue rising in 2026, especially when housing and other rate-sensitive sectors still appear to be feeling restrictive policy from the, notwithstanding the 150 basis points in cuts prior to today?
So I think the idea is that with now having cut 75 basis points more now, and having policy, I'd call it in a broad range of plausible estimates of neutral, that will be a place which will enable the labor market to stabilize or to only tick up 1 or 2 more tenths, but we won't see, any kind of a sharper downturn, which we haven't seen any evidence of at all. At the same time, policy is still in a place where it's not accommodative, and we feel like we have made progress this year in non-tariff related inflation, and as tariffs come through, as they flow through, that'll show through next year. But as I said, we're well placed to wait and see how that turns out. That is our expectation, but we're going to start to see the data, and it'll tell us whether we were right or not.
Claire. Claire Jones, Financial Times. A lot of people interpreted your comments at the October meeting that, when there's a foggy situation, we slow down, to mean that, there wouldn't be a cut now, there'd be a cut in January instead. So it'd be good to get a sense of why did the committee decide to move today rather than to move in January instead? Thank you.
Right. So in October, I said that there was no certainty of moving, and that was indeed correct. I said it's possible you could think about it that way, but I was careful to say other people could look at it differently. So why did we move today? I would point to a couple things. First of all, gradual cooling in the labor market has continued. Unemployment is now up 0.3 from June through September. Payroll jobs averaging 40,000 per month since April. We think there's an overstatement in these numbers by about 60,000, so that would be negative 20,000 per month. And also, just to point out one other thing, surveys of households and businesses both show declining supply and demand for workers. So I think you can say that the labor market has continued to cool gradually, maybe just a touch more gradually than we thought. In terms of inflation, it's come in a touch lower, and I think the evidence is kind of growing that what's happening here is services inflation coming down, and that's offset by increases in goods, and that goods inflation is entirely in sectors where there are tariffs. So that does build on the story, and so far it's only a story, that that the goods inflation, which is really the source of the excess at this point, almost more than half the source of the excess inflation is goods, is tariffs. And you've got to say then, so what do we expect from tariffs? And I would say that is to some extent down to looking for broader economic heat. Do we see a hot economy? Do we see constraints? Do we see what's going on with wages? You saw the ECI report today. It doesn't feel like a hot economy that wants to generate, Phillips curve kind of inflation. So we look at all those things, and we say that this was a decision to make. It obviously wasn't unanimous, but overall that was the judgment that we made, and that's the action we took.
And just on the ample reserves point, how concerned were people around the table about some of the tensions we've seen in money markets? Thank you.
I wouldn't say concerned. So what really happened is this. Balance sheet shrinkage, sometimes called QT, went on. We had a framework in place for monitoring it, and nothing happened. The overnight reverse repo facility went down pretty much close to zero. And then beginning in September, the federal funds rate started to tick up within the range, right? And it ticked up almost all the way to interest-on reserve balances. There's nothing wrong with that. What that's telling you is that we're actually in reserves, in an ample reserves regime. So, you know, we knew this was going to come. When it finally did come, it came a little quicker than expected, but we were absolutely there to take the actions that we said we would take. So, and those actions are today. So, you know, we announced that we're resuming reserve management purchases. That is completely separate from monetary policy. It's just we need to keep an ample supply of reserves out there. Why so big? The answer to that is, you know, if you look ahead, you'll see that April 15th is coming up, and our framework is such that we want to have ample reserves even at times when reserves are at a low level temporarily. So that's what happens on tax day. People pay a lot of money to the government, reserves drop sharply and temporarily. So this seasonal buildup that we'll see in the next few months was going to happen anyway. It was going to happen because April 15th is April 15th. There's also a secular ongoing growth of the balance sheet. We have to keep reserves, call it constant as it relates to the banking system or to the whole economy. And that alone calls for us to increase about $20–25 billion per month. So that's a small part. That's going on. It's also happening in the context of a temporary few-month front loading to get reserves high enough to get through the tax period in mid-April. So that's what's happening there.
Andrew.
Thanks, Mr. Chairman. This is the last post-FOMC press conference before an important Supreme Court hearing next month. Can you talk about how you're hoping the Supreme Court will rule? And I'm just curious why the Fed's been so reticent on such a pivotal matter.
It's not something I want to address here, Andrew. You know, we're not legal commentators. It's before the courts, and we think we don't think that we help matters by trying to engage as a public discussant of that. I'll give you a mulligan, though.
No, thanks. I don't know if that means I get 3 questions, but
no, just one more.
I guess I wanted to come back to the 1990s question, and like, do you see that as a useful model for thinking about what is happening in the economy right now?
I don't think it rises to that level. So I did think that in 2019, where we cut 3 times, but you know, this is such a unique situation. It's not the 1970s, let's put it that way, but we do have tension between our 2 goals. And so that's just unique in my time at the Fed, and I think going back a long ways, we haven't had that. In our framework, as you know, says that when that's the case, then we try to, you know, take a balanced approach to the 2 things. We look at how far they are and how long it would take to get them back to each of them back to the goal. And that's a very subjective analysis, really. But it just tells you you've got to. And I think ultimately what it says is when they're broadly equally threatened or equally at risk, you should be kind of neutral. Because if you're either accommodative or tight, you're favoring one or the other goal. And so we've been sort of moving in the direction of neutral. Now we're in the range of neutral. We're in the high end of the range of neutral, I would say. And that's what we're doing now. It so happened that we've cut 3 times. That, you know, we haven't made any decision about January, but as I've said, we think we're well positioned to wait and see how the economy performs.
Edward.
Thanks, Mr. Chairman. Edward Lawrence with Fox Business. I wanted to ask you, the inflation expectations has come down in your SEP report. Do you see the tariff price increases as passing through in the next 3 months? Is it a 6-month process that we're looking for that to end? And then because of that, is jobs the threat to the economy?
So with tariff inflation, you know, there's the announcement of a tariff, and then they start to take effect, and then it takes some months. Goods may have to be shipped from other parts of the, it may take, quite a while for an individual tariff to take its full effect. But once it's had that effect, then the question is, isn't that just a one-time price increase? So we actually look at it, all of the announcements and what you get from all that. You see sort of for each one of them, there's a time period, and then it's fully in. So if there are no new tariff announcements, and we don't know that, but let's assume there are no major new tariff announcements, inflation from goods should peak in the first quarter or so, right, or roughly. We haven't been able to predict this with any precision. No one is. But call it the first quarter or so of next year should be the peak. And from here, it shouldn't be big. It should be a couple tenths or even less than that. We don't really have precision on this. And after that, again, if there are no new tariffs that are being announced that will take 9 months to get fully in, and 9 months is also an estimate, then you should start to see that coming down in the back half of next year.
And I want to see if I could address sort of the elephant in the room. The president's been talking openly about a new Fed chairman. Does that hinder your current job right now or change your thinking at all?
No.
Like,
No mulligans for it. Michael McKee from
LOL.
Bloomberg Radio and Television. 10-year rates are 50 basis points higher than when you started cutting back in September of 2024, and the yield curve basically has been steepening. Why do you think that continuing to cut now, especially in the absence of data, is going to bring down the yield on the thing that will move the economy the most?
So we're looking at the real economy and focusing on that. And you've got when the long bonds move around, you've got to look at why they're moving around. If you look at inflation compensation, it's very that's one part of it is inflation compensation break-evens, and they're at very comfortable levels. They're at levels consistent once you get out past the very short term now. Break-evens are at at quite levels that are quite consistent with 2% inflation over time. So there's nothing happening with rates going up out there that suggests concern about inflation in the long term or anything like that. I mean, I look at these things pretty regularly. Same thing with surveys. Surveys are all saying that the public understands our commitment to 2% and expects us to get back there. So why are rates going up? It has to be something else. It must be, an expectation of higher growth or something like that. And that's a lot of what's been going on. I mean, you saw a big move, toward the end of last year, which was not to do with us. It was to do with other developments.
Well, you just mentioned that we're